Okay, first episode of Real Theory, Varshan. We get right into it.
Yes.
2025, where do we see the market going?
Yeah, I mean, man, 2024, ended off a little bit slow.
Yeah.
Right? I think a lot of us can agree to that. We've seen a little bit of a resurgence. I would say, what was it, like September?
Yeah,
October?
near the bottom of the year, last quarter of the year, we did see like the market pick up again.
Yeah.
I think most of it was anticipation to what we think was going to happen in 2025. I think if you're online or if you were watching the news, the outlook was pretty much rates are coming down, jump in.
Which they did.
They did come down, but like I think the prediction for a lot of people were rates are coming down, jump into the market and buy something before you have to enter that really hot spring market. And this time last year, January, we were seeing it much busier than it is right now. We're almost halfway through January. Doesn't really show any signs of life.
Yeah, looks like we're getting more listings than
than sales.
Yeah.
So like, given that, where do you think we went wrong here? Because like I don't know that it might be too early to say where we went wrong, but like, do you think that those predictions that we had, bottom of last year are will still remain true for 2025 hot spring market?
So, I mean, it's all relative to what you think hot is. If you're comparing it to 2022, 2021, I don't think we'll see that type of volume, right? I definitely do think we'll see increased volume just based on the number of calls I'm getting for pre-approvals and just, common inquiries. I've definitely seen an uptick in that. So I do definitely see there's a lot more interest, which can peak a bit more demand. But I think the reality of the situation is, rates have come down and everyone expected, once Bank of Canada made that, the last rate cut was 0.5%, right? You would expect a lot of people to rush into the market, or at least that was the expectation, right? But that didn't happen.
It didn't happen.
And the reality is that, that's just affecting the variable rate. The fixed rate was still low, in some cases under 4%, right? And people still weren't making a move in that sense, right? So I don't think the interest rate cuts are going to be enough, to push people into it. I think people are really examining and realigning their goals to see whether home ownership is what they want to do, or maybe they think, hey, both of us can agree, there's a lot of inventory. When there's a lot of inventory and low demand, typically prices come down, right?
Yeah.
So maybe they're also seeing that as well and thinking, hey, maybe I wait a few more months, right? But the reality is, and I think we'll talk about this more into more detail, is you want to put in offers when it's a market like this, right? Because this is where you can find deals, right? Where you can create deals, right? So I think waiting to the spring market or, waiting till rates come down and, more demand comes into the market, that might be the wrong time because now you're competing against different folks, right? So, market-wise, I think, yes, we're going to see a little bit of a slowdown going into the spring, but spring we'll see a little bit of an uptick. Yeah. I do firmly believe that. I think there's a lot of uncertainty in the market right now, given, the political.
But when you say uptick, I think you're just saying like versus the last 2 years.
Yes.
Right? Not necessarily overall growth in price.
No. So I've seen there's a lot of like predictions with like the real estate groups saying like, up 5% this year or whatnot. I think we'll remain relatively flat.
Yeah. I think CREA, Canadian Real Estate Association, they put out a report something like 4.75.
Okay, wow.
And it's like, where are you guys pulling these numbers from? I don't know.
Yeah.
But
that's overall to the Canadian market, right? So like even the last few years while Toronto and, Vancouver was struggling, you've seen Calgary, Edmonton do fairly well.
That's
right?
true.
So
that's fair.
I don't know how, like, you can't really take that prediction and purchase in Toronto, right? Like,
No.
That's even within Toronto, like certain neighborhoods are completely different too, right? You look in Durham, you look in Markham, that's different neighborhoods even within those regions. So it's like
Toronto's going to hurt a little bit longer just because I think the condo prices will pull down the overall average price. So for that reason, it's going to seem like it's going to remain flat for a little bit.
Yeah.
But like just going back to the whole interest rate conversation of like, low rates means, more sales. Like just all we have to do is look back to 2008. We know that's not true.
Yeah.
It usually takes time after rate cuts happen before the market starts to pick up.
Yeah.
And by time we mean like a couple of years, right?
Yeah.
It's not instant, because if that was the truth, we would have seen the market pick up last year. Or even right now, like this is, as you said, this is the time to jump in to the market.
There's just way too much inventory, right?
Way too much
that's
inventory.
Just what it is. Like, think about it. If you're shopping right now for a house and there's like 30 different types of properties you can view, you're going to be like, hey, maybe I'm not too, keen on buying right now. Maybe I'll keep waiting. But if there's like one or two, the urgency comes within you, right? Just from a psychological perspective, right? And you're like, man, we need to buy this house because these houses are selling fast, right?
Yeah.
It's like, it's a whole same thing with
it's FOMO.
It's FOMO. And it's also like, when a store opens up, right? Everyone's lining up, but why are you lining up? Like it's just for the hype, right?
It's just for the hype.
It's not like you really need this thing, right? Like let's say a new pair of Jordans, right? No one needs a new pair of Jordans, but there's a ton of people that are willing to buy that when it releases, right?
Yeah.
I know it's not fair to compare Jordans to a house, but
it's the same.
It's the same psychological thing, right?
Yeah.
We've seen that in the last 2 years where people like, I had clients that were pre-approved in like 2020, 2019 that only bought a house in like 2021, 2022, and I feel like they only bought it then because that's when they were getting pressured internally to purchase a house. Right?
Yeah, because I think the thought up until that point is we're going to continue to save money, put away these funds so that we can have a bigger down payment, so we can have a smaller mortgage payment.
Yeah.
But like you will hit a point where it's like, oh no, we're running out of time. It's about to expire. We got to jump in before our whole plan falls apart.
That's right.
And I think that's what people were trying to get ahead of in 2020, 2021. They were literally seeing all their goal plannings erode right in front of them. It's like now or never. We have the reverse problem now where it's kind of like we have time. We can sit back and we can watch this thing and see where it goes before we jump in.
Yeah, no, that's right. So let me ask you, what are your expectations for this year in terms of the market? Like, what do you see?
I genuinely, I think the market will be flat. I think there won't be any price growth this year. I think we will probably see maybe a surge in transactions. So I mean, like just coming from a down year.
Yeah.
And I think most of those transactions will happen from people who are upsizing.
Yeah.
I'm sure like there's always going to be new buyers, but I don't think they will be the ones that motivate the market.
No. And I think what you said about the sales upticking, I think what we've seen in the last year or two, like it's not sustainable at that stage,
not,
right? Like people still need to move. Like there's a reason why people are buying and selling, right? It's not just because they want to make money on their house or whatever it is, right? Like they need a home to live in and they're choosing to buy over renting because there's these benefits to doing that, right?
Exactly.
So, I do definitely agree with you as well. Obviously,
that's always been the real estate market, right? Like if you think pre-social media, that's always been the makeup of the market.
Yeah.
It's always been people who are needing to upsize and people who are just buying their first homes. They didn't have external forces other than maybe their family members pushing them to go make this move so quickly. Versus now, it's like you can't look at anything media related and not feel the pressure of falling behind.
That's true. Like you only see advertisements on like the mails that you get in your house, right? Like you don't see like now there's like all these cool videos that realtors put up. And like, all these like different ways you can even like House Sigma, right? Like that's like easy accessible for everyone now. Before it was just realtor.ca, right? So
that seems to be like everybody's favorite app.
Yeah.
Like I'm always like a little shocked. Like this is what you do in your free time. Just look at homes, right?
Well,
even the people who have just bought are on these apps, and that's what they do
they're
for fun.
having buyer's remorse, right? Like
that too. Yeah,
everyone has buyer's remorse, regardless of how much of a good deal you got.
Yeah,
you just want to either make yourself feel better about that purchase, or you want to just reconfirm that you did get a good deal, right? Like,
yes,
I know buyers who look at that for like 2 years, to be honest. Right?
Yeah.
But it's
after they've purchased.
After they purchase, sorry, yeah.
Yeah.
And I just want to go back to when I asked about your expectation, I just want to make sure you are predicting that for the GTA market, right?
GTA market.
Yeah, okay.
Yeah, I think in other areas I'm not really like as versed on those areas, so like it's harder for me to comment. But I would say Ontario.
Yeah.
I don't know that I don't see what would be the catalyst for price growth. Do I expect rates to come down further? Absolutely. Like they will come down further.
Has to, yeah.
But like I also experienced the 2008 recession. I know that's not how this works, right? It's going to take some time. And like a conversation that we were having off the record is just like now there's like a change in mentality as well, right? Like in this downtime that we've had for so long, we've had a chance to assess our lives. We've had a chance to figure out like, what do we want out of life now, right? Do we want this chase constantly? Are we over it? And in that, I'm finding, or I'm meeting a lot of people. You can tell me about your clients as well, but it's like people are reverting back to a more balanced lifestyle. Maybe balance is not the right word, a simpler lifestyle. It's not about the big house, the nice cars. It's just about like, I want to be happy. I want to raise my family. I want to travel. Yeah. I just want all the basics of life.
Well, yeah, I think that comes down to, I 100% agree with what you're saying. And we were just talking about that. And I think it comes down to, the lifestyle that COVID built, right? The COVID lifestyle was pretty much in your house, right?
Yeah.
And that's when people started prioritizing, their house and where they lived because they were spending pretty much all day, every night there, right? So I think that put a high priority on where you live.
Yeah.
Now that things are open, we're back to regular living. People are like, oh, shoot, I'm here only a few hours in a day, right? Maybe my house doesn't matter as much because I want to travel. I want to eat at my favorite restaurants. I want to, just do what fills your cup. Right?
Yeah, you're not working a 9 to 5 so you can pay for a roof over your head.
Exactly.
I mean, it's part of it.
Yeah.
It's not the sole reason.
It's unfortunately a big part of it. But, I agree with you. Like there is other stuff to your lifestyle. So you want to make sure, like that's why I tell a lot of my clients too, like make sure your mortgage fits your lifestyle. That's why we do a lot of budgeting up front, making sure that the payment is something you're comfortable with, right? Even though you qualify for it, a lot of people have side gigs. They have, side businesses that, even though their income on the application may be X amount, they actually have a lot more money that they're not showing on paper. Right?
Oh yeah.
So sometimes it looks like they're stretching their budget on paper, right? Because they're going up to their max qualification, but they do have a lot of money on the side, which they generate from different sources. Where maybe they rent out the property to tenants, and they get some of that money as well. Or maybe they have parents or family members living with them that are also contributing to the mortgage that are not on the application, right? So all of those things sometimes are not on it, but at the end of the day, I'm finding a lot more people trending towards that because they're trying to keep their mortgage costs as low as possible because they can do all these other things, right? And I think one of the things we talked about was people, not desiring to purchase the triple car garage, double car garage, 4,000, 3,000 square feet homes anymore because they want to keep that life simple. They just want to live in, what they feel is comfortable for them and then be able to spend on the other things, right?
Yeah, and you can confirm this, but during COVID, that was everybody's goal, no? It was to constantly buy up, sell, and to get to that home.
Yeah.
And what you're saying is now people are saying, we're okay. Yeah. We'll step back a little bit.
And I also think a big part of that is also because prices have come down, right? Yeah. So people are not seeing I'm going to miss the boat if I don't purchase that house anymore, right?
Right.
Because what we were seeing a lot of was, especially if you're in a condo or townhouse, buying that double car detached seemed way far apart, right? I think the price difference at that point was maybe in some areas even 600, 800,000, right?
Yeah.
So even $1 million, I think in some cases, because I remember condos were going for 600,000-700,000. A detached double car garage in some areas were going 1.7, right? In Durham, right?
Yeah.
So just as a comparison, so it's how do you make that $1 million delta, right?
Yes.
Whereas now that's come down to maybe 1.2, 1.3. the condos only come down to like 500, right? So that delta's come down significantly down, right? So I think that has a huge part into it where it seems more attainable and people are not like desiring to go there right away. Maybe they'll get there after like, X amount of years, or if they really do even desire that. But yeah, no, I think people are just looking at life at a completely different way now.
A different scale. It's trying to survive, and like when they're looking at,
and I think it's the right way. I think we should mention it. Like, we don't think this is wrong. Like I think this is how it was.
Exactly.
And just that FOMO is completely gone. Right?
Yeah, social media has completely ruined the conversation around real estate. It's turned everybody into an investor. And the conversation is almost like, if the value is not going to go up, don't buy a home. And like I get that part of the argument. That's not true. It's just there's inflation built into the economy. Your house price will go up over time. If it wasn't going up over time, that means the economy is broken, right? Well, inflation is not working. Sorry, you were going to say something?
No, I was just going to say, like, I think a lot of it also with social media is like it's just made it very easy to purchase and like just that experience of investing. But in reality, that's not the full picture, right? And, and I think because there was a lot of people buying in during COVID or like during 2020 to 2022, I think it inflated a lot of the asset prices because people had a lot of money on their hands. They were able to buy, and they were just inflating the cost of buying a house, right? Whereas now, because of the desire is not there, the demand is down, the prices have come down, and I'll probably stay like at a stable pace or grow at a stable pace going forward, right?
Yes.
Sorry, you were saying something.
No, I was just saying, like, I think like a lot of the quote unquote investors, they would not have been exposed to the conversation had it not been social media. For social media.
That's true.
Like prior to social media, like, unless you're a part of a certain group or whatever, like that train of thinking never really crossed your mind.
Yes, that's true. Yeah.
And so like now we've just normalized it. It's like actually
you need to invest.
You need to invest. It's the average behavior. Sorry, it is the baseline behavior for an average buyer. Yeah. Right?
Like,
and that's not good. That's not healthy.
It's not for everyone. That's what the reality is, right? Like maybe you are someone who should open up a business rather than investing in real estate. Or maybe you're someone who should invest in stocks.
There you go.
Rather than investing in real estate, right? Like it's not wrong. Like I invest in real estate, you invest in real estate because we're also in the industry. We understand it. We have our foot on the ground every day. So this is what we're comfortable with, right? But folks that work in, let's say, the equities market, they might be better off just trading stocks or maybe open up a franchise. I don't know. Like there might be another way.
You make such a good point. I wasn't really even thinking about that, but you're right. And like that's probably the reason why like us as a country are not able to build anything. Because as you said, anytime someone gets disposable income, rather than building that business or following through on something that they wanted to do, they're just going for the easy money. Social media is telling me, go buy a home. It's going to grow 50%. Yeah. I'm putting it in the home versus taking the risk on building a business, hiring employees, potentially taking a loss. And so, like we are about to go through some growing pains potentially.
Definitely. And I think that's going to trickle down to a lot of different, sub-industries within the real estate industry, right? Like
absolutely.
I've talked to my contractors. They're all completely slow, right? Which I think might go up with this new secondary suite loan that they're coming out with.
I think so too.
But that's a topic we'll discuss another day. But yeah, just like different industries within the market. I mean, a lot of condos have delayed their constructions, right? Closings. Yeah. So it's like,
closings and constructions.
Yeah. And that's going to come down to a lot of different, that's going to come down to affect a lot of our different industries, which can lead to job losses. We can reduce our GDP, which is going to decrease or, not decrease, but will, kind of put our economy at a standstill, right? Because we're not investing in the right things, right?
Exactly. And so like, I guess speaking to the condo market really quickly, these dog crate condos, these studio apartments, these one bedrooms, let's be real, they were never appealing. No one's ever been like, I want to buy this, I want to live in this. The way we got to this point of like wanting this or desiring these units is because relatively speaking, everything was so far out of reach, right? Relatively speaking, like a 2-bedroom is like a 2 plus 2 is at a 1 million. So now this 1 plus 1 at 7, 8, whatever, depending on the building area, it makes sense. But when everything has crashed, or not crashed, when everything has come down, I wouldn't call it a crash because we're nowhere near like 2018 prices, right?
No, definitely not. And I think we've seen the worst of the crash.
think so.
I think we're coming out of it, right?
I think so too.
Because that's when honestly rates were 6-7%, right?
Exactly.
Like we're well into the fours, low fours, right? And I think we'll get to the threes soon.
Sometime this year. Yeah.
So I don't think we're gonna see worse, right?
Than this.
Other than this one thing, which is obviously massive job losses, right?
Yeah.
If now businesses start to lay off a ton of people, which we are starting to see, right? But I mean, at a large scale, then I think we're going to definitely see markets crash. Because there's a lot of people that won't be able to afford their payments if that happened, right? So.
Yeah. And that's coming this year, like the layoffs, the job losses. And I guess like the point I was trying to make is just like, relatively speaking, these smaller units made sense at a time. Yeah. But like, I think right now, given like the oversupply of units of everything, like every unit type available, I don't know how these units recover. Like unless these sellers are willing to just take the L, sell at a loss, step away, and then allow these prices to naturally reset, meaning you're selling it at $100,000-$200,000 loss.
I know. People
are going to just have to sit and hold these properties for the foreseeable future, minimum 2 to 3 years.
That's the risk with pre-construction investing, right?
Yeah.
Like
but this is going to hold down the entire average price of Toronto.
100%. And what I've actually seen, and this could be maybe the thing that turns it around, is I saw a chart where the amount of condo starts in, I think 2028 or 2029 is extremely low.
Yeah.
So essentially no one wants to build condos, right? Or is planning to build condos at that. So I think maybe once that hits and inventory starts to decline, maybe that will bring up the prices. Will it bring it back to the peak? It's hard to say. I think that's going to take some time, right? The only positive is if your property is in downtown, you do have that, like you could say, that blue chip type of stock, right? Where it's in an excellent location, right?
Yeah.
It's just a matter of whether that building management is solid and your condo fees don't go up, right?
Yeah.
And things of that sort, right? Because I think you were saying a story about how one condo's fee went up. Like
after 15 years because of like repairs, right?
Yeah.
What do they call it? Special assessments
Special
or whatever.
assessments, yes.
Yeah, you do a special assessment and then you realize it's going to cost you like $15 million to change all the windows in the building, and all of a sudden all the owners are on the hook for this. Yeah. And you're not going to have the money to pay for these windows, so you're going to have to call in a home insurance claim, and then your maintenance fees goes up. So I guess like this conversation speaks to the expiry date on condos. Not all condos are built the same, and just like a home, they also require maintenance over time, which leads to higher overall monthly maintenance fees.
And that's why I don't personally like condos.
Neither do
because
I'm not a fan.
You don't have full control of the condo, right? Like there could be a huge lawsuit in the condo, and that could lead to a special assessment.
Exactly.
Because they don't have the reserves to do it. So you need a well-managed builder. Like, I know there's like Tridel and all these names that
probably one of the best. Yeah.
So, but like there are a lot of condos that have sketchy ones, right? So it's important to like do your due diligence and like review that status certificate to make sure that, and again, even if you review and everything goes well,
you're still at the mercy.
You still don't have control, right? And that's something that I don't comfortably feel okay with, right?
Yeah, same here.
Especially now you're seeing like if you want to sell, you're going to sell it at a loss, right? Because you're forced to, right?
You have to,
So anyways, the one thing I wanted to mention from before, because I saw this interesting stat, Toby, which is the the founder of Shopify.
Okay.
He shared this post that the Globe and Mail created like some sort of chart, and it was comparing the government's investment in dwellings or real estate versus intellectual property. So like any IP products, right? And this is across like the world, all the governments. And guess who's number one?
Of course, Canada.
Canada is number one.
Australia, right? Number two?
No, it's actually Mexico's number
Mexico.
two. Then New Zealand, right? And at the bottom of the list, it's like Switzerland, Sweden, US. So they're investing more in the IP products than,
which makes sense,
than in real estate. And I think this has made us super unproductive, like in terms of like a capital, right?
Yeah.
And that's where it goes back to that conversation. Sorry, I just had this thought. I just wanted to
circle back. Yeah.
So I think that goes back to what we were saying. Like everyone was just taking their money and throwing it into real estate.
Yes.
Whereas now they're like, oh, maybe I'm better suited to put it into, building an app or like something more productive than just putting to real estate. I know we're still having that like a housing crisis. Like we do have a supply issue overall, right? But I think that will solve on its own. You know what I mean? You don't need people buying and like whatnot to kind of solve that issue. I think people need to be productive in other areas to make the overall economy, thrive. And I think real estate will thrive on its own.
I think that's a good point. I think you're 100% right. The market's going to need time to recover.
Yes.
And in that time, these people like that may have been an investor in the market can, as you said, go build an IP, go do something else. Once they build that business, and as long as the government turns around and like helps them with taxes and whatnot, like I think all the tax stuff that they announced is getting scrapped anyways. It's Trudeau resigned before he could go could get passed, right? The capital gains. Anyways, the point is now you have all this extra money. You go build this business. It becomes successful. Canada is also helping you stay in the country to build. Now you have profits to take into the market, which is normal. That is a healthy, productive person who's actually contributing to society and is reaping the rewards of it.
Yeah, and you're creating employment potentially, and there's a lot of other benefits.
Exactly.
Sure. Yeah.
So I think like you can frame this conversation how you want. I don't know that real estate's in a bad place. It's just it seems like it's going back.
This is the norm.
This is the norm. It's always been the norm. Yes. And I think for all the fast-paced people who wanted like the constant price growth, it might feel like a bit of a step back.
Yeah.
But actually, this is what you want.
Like you don't want to be tracking your price of your home every month.
Exactly.
Like, that's not what you're doing, right? Like you want to track it when you're actually thinking of selling.
Exactly.
Right? Or tapping into the equity or whatever. Or maybe on an annual basis is something that you can do because there's also principal pay down. So there is some equity you're building there. So you just it's something to be well informed of. But at the end of the day, like real estate is not like day trading, right? At the end of the day, it's a long-term investment. Like when I mean long-term, I mean 10 years, right? Minimum 5, but I would say 10 years for you to like make some good investments. But yeah, I think at the end of the day, like that mentality is slowly shifted because we're not seeing like the constant price growth. The buy on social media or whatever it may be. So I think we're in a healthy market in that sense. I think it is more of a buyer's market, right?
Yeah, for sure. It's as a buyer, this is a great time for you in terms of selection. Yeah. Like you can basically you have the pick of the crop, right? Whatever you want, you can go get. It's provided you can afford it.
Yeah.
And you're in a position right now where you can actually go leverage, right? Like you can actually go negotiate the price points. You're not gonna get trapped into anything right now.
And for all sorts of homes too, right? Like condos, you're seeing there's a whole crisis downtown with condos, right? You can get surprisingly the same condo at the same price you could buy something in the Durham region, which is insane to me, right? Like, and in addition to that, single family homes, they're not building too many of them, right? So if you're trying to get into that market right now, those prices have fallen off as well, and there's a great opportunity, right? But you just got to be able to confirm that you're comfortable with the payments, you're comfortable with this type of home, this type of location. You don't plan on moving. So like I had a client that they really wanted to get into the market, and then a year in, they're like, oh, I want to move to the US, right? And they couldn't sell their property because the property value actually went down since they bought. But if they had known from the get-go, hey, like we do have plans to move to the US, maybe they would have better off buying an investment property that they can manage while they're in the US, rather than buy something that's for themselves. So these are the things that people really need to like really own in on and like have a vision for themselves, right? Because if you don't think about these things, this is where it can hurt you in the thousands, tens of thousands. It's not about getting the best rate, all this stuff. Like obviously that is important, but that's not going to make or break your home buying journey. At the end of the day, you want to make sure you and if your partner or whoever it may be that you're buying with, are aligned with what your long-term goals are, then I think that's where you see the most success, right?
Oh, yeah, of course. Exactly. Because that is what real estate is. It's a long-term vehicle. You're not supposed to be in and out of this.
It's your biggest purchase, right?
It's your biggest
you got to
purchase.
treat it like that. And a lot of people don't. Like, a lot of people make it seem like it's like a swipe on the credit card, right? Like while they're buying. And then the reality hits once they've signed the doc. And then they're like, oh, man, I didn't know all this. And
that's
I'm like,
true. Yeah, that's true. That's true.
Yeah.
Okay, I think we covered most of it. Anything else that we wanted to touch on today?
No, I think maybe we can quickly touch on. I think one thing was just the rate outlook.
Oh yes,
So just quickly touch on it. So obviously there's a lot of uncertainty with Trump coming in and saying he's going to put a lot of tariffs on Canada. Our prime minister resigning, and us potentially having an election in spring this year.
Yeah. I think the earliest technically can be March, but it'll probably be spring.
Okay. Yeah. So a lot of uncertainty, right? What kind of government is going to come in? What's going to happen, right? So with that, we're seeing a little bit of a standstill on rates. It's been a lot of volatility, so rates have kind of stayed around the same mark for the last few, I would say last month or so.
Yeah.
And we'll probably continue to see that in the next a few months.
So you don't see anything at the next announcement?
So this is the fixed rates. This is fixed rates.
Fixed.
Variable has to come down. We're still above inflation inflation target. So that's going to come down, but it's going to come down on a gradual case. I don't think we'll see any jumbo ones like 0.5 or whatnot going forward. I think it'll be a 0.25 cut every single time.
That makes sense.
Yeah. So we'll see one this month in January. Overall, what a lot of the banks are predicting, because I don't want to get in the predicting game, because I'm not
a fortune teller.
Fortune teller, nor do these predictions ever, come true. So take it with a grain of salt. But right now, a lot of the bank economists are expecting rates to come down a further 1% to 0.75 to 1% by the end of the year. And that's where it'll like flatten off.
It'll stay put.
Right. And then maybe in a year or two, it'll come back up slowly. Right. That's what they're predicting. So I guess you can expect fixed rates in the mid to high threes sometime this year, and then the variable rate in the low to mid threes this year.
The only thing that I would put an asterisk to all this is just like, listen, things could get worse. Unemployment numbers could get worse.
Yeah.
And if we get into this position where the economy really starts to struggle, then quantitative easing is not off the table.
No, for sure.
Like,
they've stopped the quantitative tightening.
They've
stopped that. So
they had to, like when they started cutting. And like now, if we get into a point where it becomes dire, that could happen, and it would bottom out rates
every few years, as we've seen, right?
Yeah.
So it's definitely a very likely chance.
And if that happens, that would bottom out the rates. It doesn't necessarily mean you should rush out into the market and buy. I think that's just a response from the government to what's happening in the economy.
Yeah.
And right? It's not like a signal to like, hey, this is the time to go buy, despite what everyone will say.
100%. And I think the rate outlook affects more so people who are renewing. Right?
Yeah.
Because those people might be considering selling.
Yes.
Right. So it's good for them to kind of see what's being offered in the market or what they should play. Right. Yeah. The one thing I would say is what I'm seeing from renewals that we've seen thus far is that the payments are not that much higher than what they were paying because we're able to reset their amortization. Right. So if cash flow is an issue for someone, you can always bring your amortization up to 30 years to bring down the monthly payment. Yeah. So that's helped a lot.
You're just essentially stretching your loan for another 5 years.
But it could be temporary, right?
Yeah.
At the next renewal, you can bring it down to 20, you can bring it down 15, whatever you like, right?
Right.
So I think now if your situation hasn't changed in the last 5 years, which is possible, but most folks' incomes have gone up, right? But also spending has gone up too.
Spending has gone up.
So it all depends on each individual. But yeah, I think overall renewals are not coming in too bad, right? My biggest fear is people who bought in 2021, 2022, which goes into 2026, 2027.
I was going to say,
they may feel the bigger.
If you participated in the economy at that time, chances are you have quite a few new payments that you didn't have before. So it wouldn't matter if you made more money or if you were continuing to get these increases, because just like everybody else, you're equally tapped out.
Yeah.
Right?
Yeah.
So yeah. Okay, cool. Anything else?
That's it, man. That's all on my end. What about you?
No, that's it. I think that was a pretty good first episode.
Okay.
Pretty good first episode.
Awesome.
All right. So we'll wrap that up and then we'll see you guys in 2 weeks.
Awesome.
All right.
Sounds good.
Thanks.